Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's Sunday, the 22nd of February. I'm Phil Carroll.
I'm Kevin Hornsby.
And I'm Charles Archer.
Didn't know if you were here then, Charles. I was like, a bit of a delay, bit of dead air.
I've got a minor internet problem over here, actually.
Have you?
Well, do you know, the problem is that I've upgraded now to the fastest possible internet because I was assured that would solve the problem. And I now basically have the same level of internet as when I was paying half the price with the same service that's not improved. So you've got to go through the hassle of calling a man out to look at it. But, we'll get there in the end.
We'll get there. You'll get into the 21st century eventually, won't you? Down
there. I was in the 21st century.
West country boy, like where you are.
Well, we've been in this house for a year and a half, and it's been no problem at all until last week. They just decided, you know what, we're going to throttle it. And I reckon what's happened is loads more people have taken up Virgin here, and then the internet has just, dispersed to more properties. Not acceptable. Anyway, moving on.
Kev, how's your internet out there? Because there's a lot of lag on it. I don't know whether that's your excuse for just jumping in on people all the time, or
maybe I'm also the same as Charles. I'm paying the top whack for the internet, fast as you can, as much as you can, but still doesn't always.
I'm pretty confident. It's like you pay for like gas or electricity, and like we pretend it's the free market, but it's the same fucking gas or electric coming into your house, right? Yeah. There's no free market. It's just everyone's buying on the international market, and then it's just a markup you're prepared to pay. I reckon it's the same internet. I don't believe them. I think it's the same internet, no matter how much you pay, going through the wire into your computer.
It's a utility at the end of the day, isn't it? You could switch your supplier and they use the same lines. It's exactly the same as the gas.
I tell you one thing that I wish I could get, and it's not available in Egypt, unfortunately, is when I was going to the Malafi mine in Zambia, which we're about to hear from Leon. They had Starlink in the car or in the
incredible,
Jeep.
Isn't it?
And my internet was like boom, 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 boom.
Yeah.
Boom.
Well, when we were in Zambia on the safari with Tola and Tony, they turned Starlink on, and we were doing FaceTime live back home. And I'm like, how is this even? I tell you what, that Starlink is impressive. Actually, that brings me on to little segues quite nicely, because yesterday I was doing some filming with CarWow, and I said my back was better, but this car I was in, oh my word, have I ever experienced acceleration like it? It did 0 to 100 in 4.1 seconds, 0 to 60 in 1.8, Kev. It was like being launched to the horizon. And my back's been put out basically again. But
the rule is with supercars, they're meant to injure you a bit when you're driving them properly.
Yeah. If you don't get out like almost crippled, then what's the point in having one, I guess?
It's literally 100%. Sometimes I know people that own supercars that have never driven them above 70 miles an hour. And they're like, well, we live in the UK, so I'm not going to speed. I'm like, look at this motorway.
That's like having a really pretty girlfriend and not doing the business and saving it for the next man, isn't it?
It's like a waste of time to me.
It's like my Peugeot, not to 100 miles an hour. Never.
Never gets there, yeah.
It will never get there.
Yeah. Love it. Let's have a look at some of the news stories that have dominated the headlines this week. I think there's only one story. Broke yesterday morning. The former Prince Andrew Mountbatten Windsor was arrested at his Sandringham estate on suspicion of misconduct in public office over alleged leak confidential information tied to the late Jeffrey Epstein. It's the first time a senior royal has been arrested in modern British history. He was released under investigation after questioning, and King Charles stressed that the law must take its course. The arrest has sparked widespread reaction from commentators and political figures alike. So it was only a matter of time. Kev, you and I talked about it last week. I mean, are we surprised?
Yeah, we just saw the London bus coming along, and Andrew's just been thrown under it, basically. Yeah. I mean, not that he's not done wrong things, because I think everybody knows he's done the wrong thing, but the fact is that there seems to be this royal immunity. And I think if he hadn't lost his royalship, if you like, then this couldn't have happened.
Yeah, absolutely. Charles, your thoughts on it? I mean, this is, from what I can gather, is something like the first arrest since Charles I in 1672 during the Civil War, when he was tried for high treason. So it goes back a long, long way.
Well, it didn't particularly end well for that Charles, and then they brought Charles II
Yeah.
back because Cromwell not banned Christmas and
Yeah, he was
turkeys.
beheaded effectively, I think.
It was, well, yeah. Well,
Yeah.
but then the thing is, right, I think two things about it. The first is scapegoat is the first thing that comes to mind. I think he's probably guilty of a lot of horrible crimes, but how many more people are, and all the focus on this one man on BBC News headbit. But the second thing I think is kind of funny is that the kind of stuff you might want to try and convict him on will be very difficult legally. But this is an Al Capone case, right? You know, Al Capone, Chicago gangster, finally brought down by the US Treasury Department, what was it, 1931, didn't pay his taxes. And this is a similar sort of thing. This is, you know, something that it's hard and easy to get him on because the evidence is, you know, the book is open and shut. But I don't know. I think the bigger question that will abound will be, you know, the future of the royal family in general and whether it will exist in 5 or 10 or 20 years' time.
Yeah,
I'm not entirely sure.
I think that was one of the things I was going to ask you was that is the future of the monarchy at threat? You know, could be witnessing the end of the British royalty.
Well, if you look at, I mean, I was a history teacher for a year back there a couple of decades ago. Every time there's a very long reign of a king or a queen, like we have with our former Queen Elizabeth II, what comes after is often very volatile and choppy. And it's the same with any kind of power. If you look at any royalty, any dictator, any leader who's been in power for decades and decades, when they die, it becomes very volatile and choppy. And so, who knows? But I think that while our current Charles III is kind of like no one particularly minds either way, William and Kate are very popular still. So you know, we shall see.
You're right. I think maybe they are the saving grace. Maybe William and Kate are the most.
I don't think Charles is particularly well liked, to be honest with you.
But I think
in comparison to his son Kate, there wouldn't be any doubt that everyone would choose the two of them as over Charles.
Yes, but the point of monarchy is you don't get to choose. So
no, I agree.
But it's the same as the House of Lords, right? And House of Commons. I mean, people talk about the Lords being out of date, and it is, and it's overstuffed and whatever else. But actually having a check and balance on power, which isn't democratically elected, can make a lot of sense. You know, it does mean that, you know, if you have people that don't have to bow to the masses, you know, if you look at the Commons and the way that our politics works, the reason why we're in such a mess is because everybody only cares about the next 3 or 4 years rather than the next 10 or 20. But I think, Phil, the other kind of really important news to talk about a little bit is Iran, Hormuz, the oil situation, the US. You know, that's the sort of Damocles that's been dangling over the global economy for a long time. It'll probably blow over, but it might be that the US invades Iran over the weekend. And we don't.
I mean, I've seen that they've been moving a lot of their troops out. They've pulled a lot of the Venezuelan, you know, all the forces from there, and they're moving them into the basically the Middle East right now as we speak. So that was at the beginning of the week, and it's a week journey. So I think a lot of the forces are preparing, but I don't know. Is he going to? I just don't know what's. I've heard that Ayatollah Khamenei has gone into hiding underground as well, which is always a kind of sign that there's going to be some sort of strike.
Yeah. Well, I think the thing is, obviously, is Hormuz is, you know, roughly a fifth of the world's oil and gas goes through that strait. So if it were to close for any period of time, oil skyrockets and inflation goes to the moon. Yeah. So does gold and silver, by
just
the way.
as they've got inflation down to 10 as well, you know.
It's like the irony, isn't it? But I mean, the thing is, you've got the twimming, you've got the escalating military tensions. You know, you have the US is basically surrounding Iran, and you've got Israel getting involved as well. But then also, if you look at the Axios reports, diplomatic efforts are being described as a nothing burger, despite what's being said, you know, publicly. So you have this geopolitical risk premium pushing in, and nobody quite knows what's going to happen. And the problem is that the chances of the Strait of Hormuz closing fully are virtually zero, but they're not entirely zero. So, you know, there's a lot of capital will be moving to risk-off assets as a result if the US does anything over the weekend to jeopardize that. But we shall see.
Gold,
we've also
silver.
Yeah.
The one thing I would say is that I think it's a cat and mouse situation at the minute. Trump's basically saying you got 10 days to decide, and if you're not up for negotiation and serious negotiation, then by the way, full power is at your doorstep and we're going to go in. Yeah, I don't know. I hope it doesn't happen for the sake of lots of people losing their lives, but it's a bit of a crazy world we're going to be living in.
It is indeed.
Yeah, And then obviously the other thing that we haven't mentioned is the conflict with Ukraine. Russia has entered its fourth year. I remember when that all kicked off very, very vividly, and I remember us saying, well, it could be over in a couple of weeks, and here we
The
are.
war will
Fourth
be
year.
over by Christmas, hey Phil?
Yeah.
Yeah. Yeah. I think the problem is I think there's no way for anybody to, quote unquote win. And by win I mean a peace treaty that won't be broken later in the future. So, a classic, Treaty of Versailles at the end of World War One, everybody was unhappy, and then we were at war again 20 years later, right? And it's the same. How can you, what kind of peace can you visualize happening? You can get one forced, right, where you'll have peace for a few years, but effectively Ukraine wants borders back to where they were before the war started, which I don't think is realistic, and Russia wants to control a hell of a lot of territory and just have control politically of Ukraine, which also isn't going to happen. So no matter what peace you sign, one side is going to be deeply unhappy. So I don't see it lasting. It's as simple as that.
And Trump's just stringing them along, isn't it? I mean, the Ukrainians have openly said that there's no way we would sign up to any deal, that these deals are an absolute joke that Trump's put together.
Yeah, but the thing is, if the US withdraws funding, Europe doesn't have the capital to fund them, so that's it. But I also think, behind the scenes, the Russia's military might, or the perception of it, has been significantly weakened. If they can't take Ukraine, then actually how powerful are they? But also a lot of their best soldiers or even potential conscripts have died on the front line. I think behind the scenes, the US is quite happy to see Russia get continually weaker. As horrible as that sounds, it's just politically truthful. So, but
on that really gloomy note, let's move on to our first guest this week. We're joined by Leon Coetzer, CEO of Jubilee Metals. Welcome back to the podcast, Leon. How's life?
Hi there, Phil. Thank you. Life is good, and we're definitely winning in Zambia, which is very nice to finally starting to show the results we've been speaking of, and looking forward to a good year ahead.
Yeah, absolutely. Yeah. So the company has reported strong H1 financial year 2026 operational performance from its Zambia copper operations, with Roan reaching targeted throughput and producing 1,246 tonnes of copper units, up 173% year on year. Molefe mined 181,890 tonnes of copper reef and delivered 9,130 tonnes to Sable Refinery. Total saleable copper units rose 8.7% to 1,543 tonnes, with financial year 2026 guidance maintained at 4,500 to 5,100 tonnes. Management highlighted improving infrastructure, stable power supply, ongoing resource drilling with Galileo, and progress on tailings and waste projects, positioning the Zambian business as the company's core growth engine. So Roan and Molefe both delivered major production growth despite severe rainy season disruption, with Roan up that 173% year on year. What are the key operational changes that made that possible, and how confident are you that these higher run rates are now sustainable into financial year 2026 and beyond?
Hi, thanks, Phil. Yeah, absolutely. You put your finger on the money there. When you look at the three components that ultimately builds up to our copper output, we've told the aspirational target of 25,000 tons of copper. It's made up of three fundamental blocks. The first block is Roan, and Roan results was fundamental to our focus to ensure that block performs to target and actually delivers the copper that it is supposed to. So you're quite right. If you look at the numbers, whether it's oxide concentrate or whether it's sulfide concentrate or the fine concentrate, which we can explain more for those who don't quite understand what it is, everything has stepped up 100% and more, running sustainably and continue to run at those levels. The Roan, the challenges we faced in the past is behind us. The team is focused on delivering those numbers, and we're looking forward to the next step up in Roan, as we told the market, which is the commissioning of that expanded concentrate filtering and drying system, which kicks in quite shortly, which then translates also into the saleable copper stepping up at the same rate as what Roan has stepped up. So that's very gratifying to see Roan perform the way it's performed. Yes, you're right. Molefe, of course, it's in its evolution phase. One can expect the production in Molefe stepping up the way it is as the mine expansion comes through, as joining up of pits is happening, and of course the drilling program running flat out with 2 drills drilling at Molefe, as we both do resource definition drilling and mine plan drilling at Molefe. And we'll shortly publish that mine plan that's done really at a very high standard onto our website, so people can actually visually see how Molefe is evolving into a world-class operation.
Yeah, I think it definitely is showing encouraging early signs, and then obviously phase 2 is now underway as well. So plus the large waste project moving towards partner selection. So how do you see Jubilee's medium-term copper growth profile evolving over the next sort of 18 to 24 months? And which of these pillars do you believe will be the main value driver for shareholders?
Yeah, absolutely. Thank you, Phil. Roan is where it is. It still have a few potential step ups, but the major driver, you're quite correct, comes from the Molefe mine, coupled also to the large waste project. Those two are significant step ups coming through into operation. Of course, what makes Molefe particularly exciting is we're only really focusing currently on roughly 15% of the actual property size that we have secured for the company. So what we're seeing today, and with the operational results coming out, it's a very small part of the greater Molefe area. So no doubt we expect the driving force to come from the Molefe investment and the Molefe operational areas that starts kicking in. And the large waste project is progressing nicely. As you said, we've narrowed it down to our major 2 companies. We're currently negotiating those terms with. A resource review from an external party has come through the first draft. That final report will be due quite shortly, and we'll also inform shareholders of the outcome of that. It all showing that we've got quality assets we've secured, and really encouraging for the growth of Jubilee. So when you speak of the next 18 odd months, you're expecting Molefe to step up significantly. You expect Molefe to have its on-site processing facility operational, and you're expecting the large waste project either to commence operation or be very close to commencing operations.
So, Leon, I'm just back from the Wild West, which is Kabwe and the surrounding areas. And when it rains there, it gets very muddy, I would suggest, is my first reaction. But what I did see at Molefe was a massively extended pit from when me and Phil went, I think it was 18 months ago. Operationally, just a completely different thing than it was before, because literally it was just starting up and we had one small pit and a situation. I mean, how long do we believe that the strike is at Molefe in terms of putting all these pits together?
Yes, I mean, that drilling, we will release that onto the market as the drilling results come out. You can see the extension of pit 1 to pit 9. It already gives you the sense of how long the visible strike is, because it's, these are pits, these are open. This is not exploration property where you are drilling to find the reef. The reef is exposed through the pits. So that alone gives you just the physical extent of the pit from 1 all the way to 9. And then, of course, remember that that's just the first part of our property. When we're speaking of 25,000 hectares, and when we speak of the current Molefe pit, and what people will visualize when they see the photos and the videos, they're looking at 400 hectares versus 25,000 hectares that we have secured. So that really is where the future resource value lies for the Molefe project, or call it the greater Molefe project coming out. And as you can see, that we specifically in the results highlighted the grade that we are sending out to Sable. So it gives you also a sense of what one can expect the drilling results to reflect in the grade that's being delivered to Sable already in this early development of this project. So definitely a very exciting project. I'm glad you noticed the sheer investment that's gone into that operation from what it was when we got involved to where it is now, and it's still far from where it's going to end up in the coming 6 months.
Yeah, I mean, I even noticed the improvement in the road structure from the mine to Sable is all in motion. You built. The last time we were there was literally, we were going over simply the shipping containers. Now, obviously, it's a built situation. And they were also explaining to me that they're going to build another proper bridge a bit further up, which will obviously help in terms of this. There is quite a strong likelihood that we have a very long reef. And as you said, 9 pits, it must be the guts of 7 to 9 kilometers long. That there is another reef which is effectively not very far away, which is basically parallel to the reef that you've already got. Is that what the initial geology is telling us?
Yes, the indications are that we have what we call a rolling reef, where the reef rolls and therefore makes folds along the property. So there is that potential that, in fact, the strike we are seeing is being repeated again as we move south in the property. So, and that is why the drilling, the second phase drilling that currently is underway at Molefe is moving more to the east and the south to confirm whether that is in fact, that philosophy is actually correct. Because if so, it means that there is a significant additional amount of shallow open cast reef, which we currently have not even accounted for.
Yeah, and what sort of, I don't like to hold you to timescales, but just give us an overall view. What sort of time do you think that we're going to actually be processing to get a concentrate at Molefe, as well as the high grade stuff going to Sable? What are we looking at there?
Yeah, so we're doing two things there to accelerate it because the copper price is good. The results from the drill results are so encouraging. We took the decision to actually implement in two phases the project to get going faster so that we do not wait for all of the processing solution to be implemented before the further concentrate is sent across to Sable. And that's why what we call the phase one implementation is commencing now. And we expect that component of that project, if all goes well and the rain actually gives us some break in the area, especially for construction, because you can mine while it rains, but you can't construct while it rains. We're expecting that first phase coming in should be operational within the next 8 to 10 weeks to actually get that. So what that allows us to do is that the amount of run of mine going to Sable can step up, can double during this part, while we then continue to implement the full processing solution, specifically doing that to get more material to Sable faster under the current favorable conditions that exist. And because the reef results, as you can see in the delivery to Sable, is so consistent that we would be amiss not to capitalize on that opportunity.
Yeah, I mean, with these copper prices, sort of 1.93% copper is very viable, to say the very least.
Yes. Correct. I mean, and there's a few components to that. It is a good grade. It's acid consumption, which is a critical factor in determining viability in grade, is particularly beneficial. So it's low acid consumption reef. As you said, the roads are being upgraded to make the transportation faster, cheaper, and more effective to our Sable refinery. So all those building blocks add up to the expansion that's happening in Molefe.
And at the minute, there's one cathode situation going on, but you have two at Sable. Can we expect by the end of 2026 that those things are fully moving?
Yes.
And
So
both will be moving full time?
Yeah, exactly. Just to clarify, you're quite right. So Sable will have two copper cathode tank houses. That's the areas where you plate the copper, make it into sheets. And as Molefe steps up, we run out of capacity at Sable. It is the reason why the second tank house then comes in to take up that additional material that Molefe produces. It's also why ultimately you might find a situation towards next year where Roan is squeezed out of Sable because all of the capacity is taken up by the Greater Molefe mining project.
Yeah, and there's no point in transporting it down from Roan when it's next door to Molefe, which would be the ideal. And then what happens then to Roan is you sell the concentrate then as it is.
Well, two things. So Roan kicks in with its own acid plant, so it means it'll leach. So it steps up even more up the value chain and sells it into the market. Correct? Yes.
Or is it possible, because obviously there's a hell of a lot of ground at Roan, is it possible then that you can have a Sable type plant at Roan, or is that
in time as you step up in your beneficiation line, you step up into various commercial offtakes, and that dictates how much or what capital you spend at what time. But yes, one can envisage that in time there's a strong likelihood that Roan will have its own Sable. So it'll have its own refinery to support its production, because Roan has now reached a stable production level. You'll also see in the results, interestingly, if you really dig into the results that's been released, you'll notice that Sable has moved from half year to half year and quarter to quarter to a more oxide dominant copper, specifically moving on to its now stable run of mine production, which means the oxide tells you what percentage of the copper produced at Roan turns into cathode. So all oxide copper is leached and plated into cathode, while the sulfide copper is sold as a copper sulfide concentrate. So you can see that shift happening. And so although, if you look at the production level of Roan, that has stepped up, yes, of course, but also the mix at Roan has shifted into an oxide dominant product, which means cathode copper dominant product. So you're getting the full LME value for your product.
Yeah, very good. The one thing that did interest me at Malafi that nobody has really talked about at this moment in time is all of these quartz veins that were being pointed out to me, because there's got to be some gold in those quartz veins.
Yeah. Well, if you look at the area, there is some artisanal gold mining in the area. So it is like lead indicators that there is likely to be some kind of gold present in that reef. The exact quantity or quality or consistency of that. Early days, unfortunately, because of the copper rush that's happened, driven by the copper pricing, Zambia's assay analytical laboratories are overloaded, and that's really the biggest delay in getting our drilling results out to the market, is the assaying of these results. We can't use our laboratory, which is a very quick turnaround, because it's not regarded as independent. You need the independent laboratory to verify your results. And that's been our biggest push, is to get those results out. Well, for two reasons. One, because it informs our mine plan, but also it informs our next phase of drilling on the project. So that's really an area that we are hoping that the labs will now step up. Some of the results are out, as we allude to in our update, and we expect in the coming week or so the complete results of phase 1 to be released. And then, of course, the results of phase 2 start following close on its heels.
Very good. So my last question is, how important is Galileo's position at Malafi in terms of giving you the ability to expand the Malafi mine with their experience and maybe even grow it bigger than any of us could imagine? Because this whole area is copper. The last time we were there with Phil, there was the Dutch mine that I think is still having problems, but you're not involved with that anymore. So just so everybody understands, this whole area from Sable out to Malafi, yes, is copper rich ground.
Oh, absolutely, Kevin. We were very fortunate, and not that we were that clever, but we were very fortunate in securing the size of the properties we've secured prior to the current copper fever in the country. We also are in an area that is traditionally unexplored. Yet from just the visual flyovers, our drone flyer footages, the outcrop copper is visible in the area, suggesting as a lead indicator that the copper is there. And so quite correct, there's quite an excitement there. What does Galileo add to the process is the fact that it allows us to focus on getting the production deliverables and the copper into cathode, while we have a team running alongside us to really be able to focus on the geological, mineralogical, and resource definition to ensure that what we're doing in the short term on our mine production planning does not destroy a reef, but actually exposes and adds value to the reef. And that combination is what's come through. Of course, initially, when you get together as teams, there's a push and a pull. There's the push from our side to ensure operationally we step up and maintain our expansion. And at the same time, Galileo to keep us honest in that where and how we're mining actually follows the reef pattern. And that is really the value that's come through. So that in what you've seen is that, and if you go back in 6 months, it'll be another significant change at Molefe as the pit designs start reflecting what actually the drill results are showing, rather than just chasing the reef as we mine.
Yeah, very good. My last question, I suppose, would be, just so everybody is aware, how do the financials work with Galileo? They got 23%, I think, of the exploration upside, I think, and I presume that means the price of the ore rather than the upside of the cathode when you take it to Sable. But just try and explain that so people understand.
Yeah, it's a very simple structure. Basically, the company who owns the mine and the reef, that company, Galileo, has a 23% right or earn-in right as they invest into that project. That is the ownership. Thereafter, we as Jubilee are the appointed toll processor, so the concentrator being implemented, the processing facility being implemented, the refinery, that is all Jubilee. We will be processing on behalf of the company who owns the mine, all of the reef into products and market and sell those products. And that's how the relationship works. So it's very much where the mining company appoints the processing company to toll refine its material. We just happen to own the mining company as well.
Okay, very good. I've just been told I've had 4 last questions, so I'm going to hand over to Charles.
You are the master of just one more, just another one.
It's fine. There's no problem at all.
But come back to me because I've got one.
We'll extend this to be an hour podcast.
It's in the post editing because we all do it right, because we have a last question and Leon gives us something, but not quite enough information, so we're going to tease it out and again. Leon, yeah, I'm gonna go with 2 kind of hard hitting ones. So basically, whenever anyone's investing on AIM, and obviously there's a story like Jubilee, you've got the fundamental case, right, which is the cash and the assets versus the market cap, but also the blue sky potential. So in terms of fundamentals, I mean, would you agree? I've done the analysis on it. So you've got $25 million cash in hand. There's 65 million more coming in from the South African disposal. Roan is valued at what appears to be the whole enterprise value, which leaves Sable, the stockpile at Molefe, the large waste project, the PGM project, all of it is for free. Is that about right? Would you agree with that?
Yeah, Charles, I mean, clearly, if you look at the asset combination of the company and the market cap of the company, it seems to be in disconnect between the two. Because you're quite right. I mean, if you just look at the fact that we have a operating Roan, as the results show, we have a Molefe mine and an operating mine that is returning into cathode, and we own this large waste rock stockpile, which is the largest in Zambia, 250 million tons of it, which is not reflected. And then on top of that, you're quite right. We have in South Africa, we have the original asset that Jubilee was listed on, Tate, still in our portfolio. So yes, when you start adding up the components, it would seem like one or the other is simply just not valued in the current evaluation.
Indeed.
It's still absent of any resource recognition, which is what we're working on. You know, it's as if the valuation reflects our production, but not the fact that the resources that underpins that production has not yet been brought onto the balance sheet.
Not at all. And then, I mean, if you're talking about blue sky, obviously the waste rock project, you're talking to potential partners that are already working in Zambia. We can probably guess who those partners might be. Yeah. But I'm not going to ask you to name them because you won't. But in terms of Molefe, I mean, Kevin and Phil were talking about, you know, multiple smaller pits. I mean, my perspective, maybe you can comment on this. If you're accelerating phase 2 drilling, targeting those virgin areas before you've even got the phase 1 lab results, clearly the geologists are seeing something in those cores that maybe it can't be RNSable. But, you know, the potentially, could this just be one large tier 1 ore body once you get through the drilling?
If we didn't believe that such a potential might
exist... Don't answer that, Leon. Don't answer that. Don't answer it. Don't say anything. It's tier 1, by the way, Charles. I've seen it myself.
Oh, wonderful.
Yeah, we would not be investing so much in neighboring properties and areas if we did not believe that something of significance might exist.
Oh, okay. I thought that's the best I could get out of you. But I think this is the key point, right? Like the fundamental value underpinning it, assets are not being recognized, and the blue sky potential is absolutely massive. And then in terms of the South African disposal, $65 million still coming in.
Yes.
Are we looking at share buybacks potentially in the future, or is it not?
Yeah, it's something that we've been in debate and in conversation with our key shareholders who have guided us, you know, their views as well. We alluded to the fact at our AGM that share buyback or similar program of giving back to shareholders would definitely potentially be on the cards in the near future, post the capital phase we're going through now. The capital phase we're going through now for the large waste rock project in Molefe is roughly 14, 18 months, then that capital phase is behind us. It then really puts the company at that position where our copper production is significant. Our potential earnings are equally significant, underpinned by large resources. So we've really achieved what we really set out in Zambia to achieve. We might have taken 3 years longer than what we had hoped for, which is a very small timeline within the mining cycles, but we've achieved what we set out to achieve. Then the timing certainly is for us to consider now, how do we redeploy the cash that the company then accumulates.
Yeah, indeed. And then just in terms of the first on-site module, right? If you read between the lines and do the actual, like between what you say, the targets and what's going to happen and where we are now, that module will enrich the ore from about 0.7% to maybe 3% at 50,000 tons a month. Is that the correct way to think about it? Is that realistic?
Yeah, so I mean, what we're doing if you speak Molefe specifically, or the large waste project, because they're slightly different, but Molefe specifically has the opportunity to go all the way right up to very high percentages in upgrades. So Molefe because it's a mine with a resource and the reef is being drilled out, ahead of you. Your processing offers you the ability to make a true copper concentrate. So it means you're going into the high percentages, you're going up to 20, 30% style of concentrates on site. To get there, you go there in 2 steps. You go exactly correct. You're taking your 1%ers and you're taking that up to maybe 2.5%ers and get that across to Sable because it's so profitable. And from 2.5, then you step up to a multiple on that to make a copper concentrate on site. Equally, if you step to the large waste rock project, it's very similar, as you said, how you look at it. It's 50,000 ton typical modules. It's making a product above 1 to 1.5% copper out of that large waste project. That's your first target. At that point, it is highly saleable, highly marketable copper. You can then take a decision to go from 1.5% to 30% copper in concentrate. Or you can partner with companies who already have the existing refining capacity adjacent to where you are and partner with them to accelerate your path from 1.5% to copper cathode, because there are existing facilities around and near your project, so you do not have to carry that capital burden to take it to that cathode, but instead you partner with companies who already have that capacity.
Yeah, indeed. And I think that's probably what a lot of investors want to see rather than more build out is, capital generation. I mean, on the large waste project, again, not going to ask you about the potential partners.
Sure.
But previously there was a deal on the table with IRH, and as we all know, IRH takes a very long time to do anything.
Yes.
That deal was already pretty good, but you've now had a couple, 2, almost potentially 3 years maybe from then to do more work on the asset. So is any new deal going to have a better commercial framework for Jubilee?
Oh, fundamentally, Charles, if where we are today compared to where we were when we negotiated those terms at the time, we would never enter into those terms today. The definition of the asset, the knowledge we've built up on the asset, the resource reviews that's been done, the test work that's been done on the asset has upvalued the asset in our view significantly. So we certainly will not be negotiating from the same base as what we negotiated back then, where we would have been fortunate if we had ended up with 20 to 30% max position within that project. That certainly would not be on the cards today.
Good. And then final question from me, in terms of the ramp up that's being expected based on anticipated numbers, it seems a little bit ambitious. How confident are you that we're going to get those numbers in the next 12 months?
Yeah, well, if you look at the numbers, you take into effect and calculate out for you the step up. So if you look at the first table that shows Roan increasing oxide concentrates by 182%, fine concentrate by a full 100%, it gives you a sense how back-end loaded the production is, as we had informed the market. Remember, Molefe only delivered its first ton end of August, beginning September last year. So everything is back-end loaded as the various operations now come to their stable level or stepped up level. And maybe just to clarify, Charles, if I can, we referenced the fact that Roan makes 3 products. And just to explain, I mean, the one is obvious. It's sulfide concentrate, which you make and you sell to the market. The second is a typical flotation produced oxide concentrate, which is sent to Sable to make into cathode. The third product is something that our technical team and our research team has developed and actually leads from or is developed from what we have done in South Africa on the chrome and the superfine chrome. We make a concentrate out of the material at Roan, uniquely so within the copper industry in Zambia, that is equally a concentrate. And we currently are producing it and stockpiling it, but it is so super fine, it's sub 25 micron. This is like baby powder fine. It needs a particular technique to separate the water from it. And that's the only part we're implementing now in February and March. So that copper that's being built up will now also flow through in this coming quarter. So it's not just the monthly production of Roan, but it's also this built up copper. All of that goes through. So you're turning production into saleable copper in the last 2 quarters of this financial year. And that's literally what's happening at the moment. Roan is producing the copper every day, the same as the previous day now, which is a wonderful position to have reached. Molefe is expanding and stepping up on the back of the resource definition and mine planning, thanks to the partnership between us and Galileo. And all of that back-end loaded up production is what now comes through in the numbers.
Perfect. And I'm going to have a second last question.
This is at least your third one.
It might even be at least. I don't know. I think we should just call a new podcast name The Last Question. Anyway.
Okay.
We've got the US and all the majors are kind of like stomping into the DRC next door. And I can't help but sit here and think that Zambia is a more stable jurisdiction for a lot of that money to go into. Are you starting to see any interest potentially from state-backed enterprises, from majors?
If you measure how full the flights are to Zambia and how full the hotels and guest houses are in Zambia, it gives you a sense of that interest that's been ticking up in Zambia. Because you are right, Zambia is seen as a more stable, friendly, investor-friendly environment, and it's got more developed infrastructure to support processing and smelting, not just mining. In the country, and definitely one can see that the number of interested companies who are visiting Zambia, trying to understand the environment and the opportunity, has definitely ticked up.
Beautiful. Kev,
okay, my last question then, Leon, and I'm sort of putting you a bit on the spot. Okay, so you've now moved out of South Africa. Other than the PGM asset that you physically own, you have all of this processing, and now you actually have the ore for Molefe for the copper, and potentially some gold, but let's not talk about that now. As an investor in Jubilee, I want to see you jurisdictionally move some of your assets into Namibia or Botswana. What do you say?
I mean, my view is that let's make sure we deliver on what we have, but we're not being blind to the opportunities that other jurisdictions offer outside of even the countries you've mentioned. We constantly would look and are reviewing opportunities that are presented to us because people are attracted to companies who have overcome the challenges of entering into new jurisdictions, who are operational and are producing copper and have a developing resource base. So we are finding more and more companies looking towards such companies to assist in the development and bringing to value of their assets in other jurisdictions. So that's something that we constantly review on. But our focus from our operational team and from our executive management team is to ensure we first and foremost deliver on what we've invested into in Zambia. But from a commercial strategic point of view, of course, we're looking at the opportunities across the borders within our region, what's evolving. Namibia is evolving into an exciting, also stable, also seen as an investor-friendly jurisdiction, and offering various opportunities there and challenges, of course. And even in Northern Africa, there's more and more copper opportunities coming forward that one has to look at, whether it suits our portfolio, but not at the cost of losing our operational execution focus in Zambia.
Good. I think that's the right.
I still state, Leon, that ultimately you are going to be a £1 billion company. It's taking longer than we all anticipated, but I think you're on the right track. So here we go.
Thank you.
Okay. On that note, we'll say Leon Coetzer, CEO of Jubilee Metals. Thanks very much for appearing on the podcast.
Thank you, Phil.
So let's move on to our second guest. We're joined by Ryan Mee, CEO of Fulcrum Metals. Welcome to the podcast, Ryan.
Thanks for having me on, guys. I'm not sure if this is my first appearance, but it's certainly been a while since we last spoke anyway.
It is your first time, so yeah, welcome to the roast. So yeah, right, Ryan, just talk us through exactly what it is that Fulcrum does, please.
Sure. So we are focused on reprocessing mine waste, or otherwise known as tailings. But we've got a very novel approach to that. We're removing cyanide from the process. We've designed a zero waste process, and we've had some fantastic results from that recently. Obviously we're partnered with Extract and Bechtel. So, we've got two heavyweights in the industry in terms of technology and engineering. So we've got the great partners, and we've got a really, novel approach to what we're doing.
Yeah, and I noticed in your recent announcement, you've launched a pilot plant scoping study with TDI, supported by Extract and Bechtel, to assess the upscaling of the cyanide-free recovery technology at the Tech Hughes and Silvernight Tailings Project in Ontario. The study then follows strong phase 3 MET results and will evaluate the pilot plant configuration, locations, capex, opex, and execution strategy, with completion expected in around 10 weeks, representing a key de-risking step towards commercialization. So it does finally look like things are moving well. But just tell us more a little bit about this pilot plant scoping study.
Well, yeah, first I'll touch on those phase 3 results, because ultimately that's the key that unlocks the next stage, which has allowed us to move to the pilot scoping study. I mean, what we've actually demonstrated here is a really fast leaching technology, in 6 hours, but we can co-extract multiple metals at the same time in the same process. So this is really game changing. But not only that, we've also proven the closed loop nature of the system that's been designed. We can dewater tailings in 1 minute. So that tells us that the back end is highly effective, not just so that it doesn't back up, the leaching of the metals, but also it means that we can recover water and the reagents and introduce it back into the leaching stage at the front end. So this is all real game-changing stuff. So the next step is the most obvious step, and that is, how do you take that into the real world? So we're completing that pilot scoping study, with TDI, with Extract, with Bechtel. And part of that is, obviously we've already got the high level concept of a commercial plant. We've now armed with these phase 3 results. What that allows us to do is create a smaller scale plant. So what we're doing at the moment is we're assessing potential site locations in Timmins, with our partners, with the local government also. I mean, the local government are really excited about the results that we've got, and what actually this might mean for the industry, not just for tailings, but as a whole. So they've been very supportive. We've identified a number of sites, as have TDI and Extract, and we'll be going out to Timmins in a few weeks' time to choose a site. But this is all about upscaling. We know the technology is capable. This is about demonstrating that. But actually, we're not doing what people normally do. So what people normally do is they take a project, they put the pilot plant on the project, and they upscale from that point. Now, we've got an exclusivity for the Extract technology in the process for Timmins and Kirkland Lake. Now, that covers over 70 different legacy tailing sites. So what we're positioning this pilot plant is to be a standalone plant, slap bang in the middle of Timmins, amongst all of this mine waste, so that we can upscale our own projects, but also have a look at the other tailing sites. And that's going to create us a really strong pipeline of project growth.
Sure. Hi, Ryan. Nice to see you again. Been a couple of years, maybe. But we last spoke, was it resourcing tomorrow? Was it 2024?
Yeah, it must have been.
Must have been. It's amazing, isn't it? I'm holding your pen I picked up on that day, believe it or not.
It's that long ago, Charles.
Is that long ago?
Well,
I don't know. It's run out of ink, if it helps.
I think, Charles, it was December 2023.
Was it 23?
Time moves quickly. I'm pretty sure it wasn't 24.
Well, I think
it wasn't 25.
I think 24, to be honest, Kev. It wasn't that long ago, because we were all there together.
Sure?
Yeah.
Okay.
I don't know. Well, I don't know. I think back then, whenever it was, like you'd walk in and there'd be like sort of kind of like a somber atmosphere. because everyone was sort of a bit miserable. Nowadays, you walk into these conferences and it feels like, the start of the AI tech bubble and everyone's sort of happy and there's money flowing everywhere. It's great. These phase 3 results and that, we're talking about mineral resource estimate. That phase 3 work pushed gold recovery above 70% using this cyanide-free process from extract. What milestones are remaining between now and the MRE, and what would a positive estimate mean for the company's route to production?
Sure. So, first and foremost, Tech Hughes is our start point, right? It's not our end goal. We clearly could, we didn't want to complete the MRE because we wanted to prove, that firstly we can extract gold, secondly that we can extract silver, and have a look at a basket of other metals and minerals that, we initially targeted. So we had that initial basket based on the estimated tonnage that we think is there. That's come up with some great figures for us. So, and there's other things that we haven't tested yet, which could be potentially high value interest to us on the project. So we'll be working the MRE alongside some of the pilot testing. We aim to be pilot testing towards the end of this summer. So we've got a very, focused, short scoping study period. You mentioned 10 weeks earlier. And we're going to move really quickly through to getting that pilot plant in place and start that pilot testing, because we could do the MRE now, but the work that we've got lined up would only put that MRE out of date really quickly. We're going to have these work streams alongside each other, and actually it will allow us to, as I say, upscale, improve the concept, for instance, on Silvernight as well.
Yeah.
And some other potential opportunities too.
It's interesting because Bechtel, which possibly in London is not a household name, but is one of the world's largest engineering and construction firms. Obviously, they've taken this strategic interest in extract and in the cyanide-free gold recovery. Could you just give people a flavour of who exactly you're partnered with through Extract and Bechtel for people who don't know who these people are?
Sure. So Extract Process Solutions are based out of Kentucky in the US. It's a company, from the Reynolds family stable. The Reynolds family have been involved in the mining and metals industry for over 100 years. They're still active in the market through commodity trading and other means. So Extracts, they are not, it's just been designed in a garage over the last few years. It's been designed, over the last decade by people that know what they're doing. Bechtel have been part of that process over the last 10 years. Bechtel, such a massive engineering company, they simply don't take risks. So a couple of years back, they partnered with Extract to commercialize the technology. So this technology has gone through that vetting process by one of the biggest mine service companies in the world that, turning over tens of billions of dollars on an annual basis. And they've seen the technology, they recognized the game-changing nature of it, and they've adopted that as part of their suite of tools, as a group, which I think is a huge endorsement for the technology, the overall partnership, and the fact that, Fulcrum are partnered with them, but not just on a project basis, through that exclusivity in Canada's two biggest gold camps. I think that really sets the tone on what they think of Fulcrum and what the market, how the market should be viewing Fulcrum too.
Yeah. And then in terms of the technology, so scaling it, obviously proving the concept at lab and pilot scale is one thing, but moving to commercial volumes can be a different challenge. I guess in terms of technical and logistical hurdles, when you're scaling up at Tech Hughes, what do you foresee coming along? And how does that master licensing agreement with Extract de-risk the process?
Well, sure. Both of our projects are in Kirkland Lake, which is within the exclusivity region. So that obviously gives us confidence in terms of the licensing, actually getting up into production there. In terms of the upscaling, yes, there's always a risk around that, which is why pilot testing is such a key de-risking activity as part of not just a project, but a technology too. But, the technology itself has been through robust testing on various different projects, around the world with major companies as well as our own. And we've only had very positive results from that. The actual process, the processing plant that has been designed, we're not building new wheels here. This is using tried and tested equipment. but utilizing it in a different way. So from an engineering point of view, we've got Bechtel. Show me the last project that they failed on. I can't find one. So, we're very confident in the designs we have. The technology has proven to be extremely robust, and every time we test, we get better results. Obviously, as you say, we'll be pushing higher volumes through, in a pilot as opposed to a lab, but we're extremely confident given the robust nature of the testing that we have done and others have done.
Yeah, well, this is the thing, right? I mean, the technology is new, but the equipment, the hardware that you're using is tried and tested, so it gives you a lot more confidence than you might otherwise have. But in terms of scaling the kind of the hub model, hub and spoke approach, obviously anchoring those operations at Tech Hughes, but you've got nearby tailing sites like Silverknight.
Yes.
In your mind, how many sites could the Kirkland camp realistically bring into the model, and over what time frame?
Yeah, well, look, according to the, government database, there's around, 30 or 40 different legacy tailing sites in, the Kirkland Lake, kind of pushing a bit further over to the east. But where our Tech Hughes and Silverknight projects are, is an area called the Kirkland Main Break. That was one ore body that produced over 24 million ounces of gold. And they call it the mile of gold. It's literally 7 miles, one ore body over 1 kilometer.
Yeah.
All of that mine waste was pushed into all of the surrounding natural enclosures. So you're talking of lakes and marshes. I think there's about seven or eight of these sites in that immediate area. We've got 2 of them, which is Silverknight and Tech Hughes. So we're looking to use Tech Hughes to lever ourselves into the wider opportunity there. We'll get in situ plant up and running, processing material at Tech Hughes. Silverknight a couple of kilometers away. So it's really easy to get the tailings material over to the processing plant that we put at Tech Hughes. And as I say, within you can within 5 minutes drive you're going past other tailing sites. So the first mover on this is really key.
Yeah, yeah. And this is the thing, right? Like it's kind of hard to imagine, or maybe it's not, I suppose, for mine, but these tailing dumps that you're dealing with, some of them are well contained, but there are others in the area that are just, toxic, leaking, stinking masses of environmental disaster zones, basically. And what you're doing is not only are you getting money out of it, kind of describe what do you leave behind, how are you improving, the environment as you go along.
Sure. So the tailings at the moment, you're talking, 35 up to 45% moisture content. So they are dry, but there is water running through them. So they're easily accessible to us. But essentially, as you say, this is mine waste. It's been untreated. It's been put into the natural enclosures, and it's a mess. It's like, a bereft beach, with the only thing growing on it is weeds. So as part of what we do, we get to reprocess that. And this is what's key with the dewatering, because that is how we get to remediate the sites. So what we've proven is that we can get to, 80% plus dry material as part of the process.
Yeah.
So what that means is we can look at putting back in place a cleaner, drier, environmentally stable, structurally stable material back into place, re-landscape it, revegetate it, and bring it back to nature.
Yeah, and this is the thing, right? Because while you might initially have some challenges getting locals on board, not in this particular project, but if you choose to expand, once they see the results in real time, it'll go from we don't want you to involve to begging you to come along and sort out their mess. Yeah, I mean, so this is the thing, but then also it's not just for gold, is it? Because those phase 3 results, I saw there was a little bit of silver, tellurium, gallium. People love the rare earth story. So those co-products could also improve the economics quite dramatically in some circumstances.
Yes, it can. Well, what it does is it serves 2 points, right? So firstly, what we're doing is leveraging gold and, precious metals basically to access critical minerals so that we can actually even access, really low concentrations of those. And the second, the second point is, we're bringing, new generation processing capacity into Canada. There is nowhere to take these or any tailings at the moment in Canada because everything is using, old techniques, cyanidation, and, that has really low recoveries and it takes a long time on tailings because, this is like fine powdery stuff already. So we're serving many points on that. We're keying into the critical mineral and processing ambition of the Canadian government, which is not lost on them. So they're pretty excited about what we're doing. But if we look at what we can actually extract and not focus on the actual content of the tech use tailings, this has given us a blueprint to lift up and go and place over other tailings. Other tailings will have different contents varying with, gold, precious metals, and other things like copper and zinc. I mean, look at those extraction rates that we have there for copper, 85%. I mean, it's phenomenal.
It is. And then last question from me to anybody.
Are you sure?
No, I've got several, but you've unmuted yourself, so clearly you have some to pop in. I don't want to bang on forever, but two things. There's a two-parter. The first is, would you agree...
That means it's two questions.
It is, yeah, exactly. I'll put them in one. But they are linked.
Starter for 6.
Anyway, would you agree that, because I looked at this 2 or 3 years ago, and I thought it was very interesting, but would you agree this technology is better than all the current alternatives on the market? Part one, and I know you will, but explain why.
Yeah.
But the second part is, a key part of investing in small caps is diversification, right?
That's right.
And so feels very much like a unique story, that there's no other way to get at extracts technology. You have this kind of exclusive moat with, the master license for it. There's nothing else quite like it, and it's better than anything else. Do you say that's fair?
Well, look, I genuinely don't know of a better technology. I've obviously looked at, across the board, different methods. I mean, cyanidation, using cyanide, that's just not wanted in the industry, but more to the point, you don't get the recoveries that you need from tailings to make them economically viable. With, kind of flotation, that process, you get higher recovery rates. Your leaching times are longer than what we're seeing. So the scalability of that is limited in comparison. But with flotation, you get really high consumption of reagents, and reagents are one of the biggest costs to a tailing operation. Your transportation and your reagent costs are the two biggest things. So what we can show is, the technology that we're using with extract is so robust that actually we can recover it and reuse it, recycle it. And that has so many positive implications, not just from a cost basis, but think about, transportation costs, congestion on the roads. So we're really limiting our impact, not just from, an environmentally stable position, but also our footprint on the local communities. We're using less water. We can recycle the reagents. We're going to be using less transportation. So these are really some key big ticket items that don't get talked about enough when we talk about processing. Now, if we look at the other non-cyanide types of processes, the bio-leaching, it's a fantastic technology, but it's not new. It's been around for decades, and it's been around for decades because your processing times, instead of being able to do it in 6 hours like us, you're talking of between 90 and 150 hours per batch. So what that means is the equipment that you have to use, the pre-treatment, all of these things are on a huge scale compared to what we need to do. So we can clean, we can wash quicker, we can use smaller equipment. This is all about how can you be, less of a strain on local resources and local communities. You also have, hydrochloride, again, that's been around for decades. And some of the issues that you find with that is it's essentially bleaching. You're going to waste a lot of reagents. And it also has limitations on targeting more than one mineral. And the other thing is you get a lot of absorption losses through that as well. So the process we have is a lot more stable, a lot more robust. We have the multi-element targeting to that. It's a really simple one-stage way of doing it. So there's multiple benefits.
Beautiful. Kevin,
over to you. Expecting such an explanation, but there you go.
Indeed. Well, it's better to explain in full than to explain in parts.
Yeah, my question is sort of a bit of an overlap of that. Extract, not obviously Extract Resources, Extract the company that is helping you do these things. How what's the right way to put it? How secure is your deal with Extract, not just in this area, but the potential to expand it, if you like? Because I think, me looking at the numbers, there's potentially literally millions of ounces of gold, even just at your doorstep, in terms of what is available. And that alone would be a major company maker. But if this company does want to become literally worth $1 billion, then the security of your deal with Extract and your partners is going to be the key to whether that happens or whether it doesn't. So I suppose my fear as an investor is, what is that deal and how secure are you in that deal?
Well, look, the partnership we have with Extract, it's not something that's been developed over the last couple of years. This comes from a deep-seated, relationship that we've had over 10 years. We've, even 10 years ago, I went out to visit Extract and their testing facility, and, first met the president there, William Floorman, who's a fantastic guy. So this is actually, a relationship that we've built through trust and confidence over quite a long period of time, and they trust us. So the exclusivity is watertight. We've already had approaches, within the exclusivity region, reach out to Extract, and, we've remained solid on that, on the deal that we've got there. But, we're working so many different angles on opportunities with Extract, within the exclusivity area, and, other things that might be of extreme value to not just to Fulcrum, but also to Extract, because mining is one of the worst industries to adopt innovation. Even if it's there screaming at you in the face, you need an adopter, you need a disruptor, you need someone who's going to grab the market and go, right, I'm going after this. And that's what Fulcrum are. So we've got a very strong personal and business relationship. Fulcrum are clearly going aggressively after the tailings market, hence the positioning with the exclusivity, hence the 2 projects that we already own, hence the strategy with the pilot plans, and the influx of interest that we've had over the last week and a half, which has been phenomenal.
That's from Indaba or just in general?
Well, Indaba was fantastic. I mean, you was there yourself, Kevin, and hopefully I've done Fulcrum proud on our pitch battle there. But we're seeing interest, not just within exclusivity region, but other provinces and, other parts of the world. So some really big opportunities are presenting themselves. The pilot plant is the key to that. That's the upscale tool. As I say, the approach there is so we can upscale not just our own projects that we have right now in Tech Hughes and Silvernite, but as we can bring in, other partner opportunities too.
So the 2-part question. The first part is, how many more of these tailings do you think you can actually own outright, as in buy within the Kirkland Lake area?
Yeah.
And how do Extract financially benefit from this? So I understand Fulcrum benefits, the metal comes out, you sell the metal, but how does Extract financially benefit? Is it going to benefit from every ounce that's sold as well, or how does it work?
Yeah, so Extract are the technology company. Technology companies earn their money through licensing. So they'll have a royalty placed over whichever project is using their technology and producing, whether it be gold, copper, or similar. But that's done in a light-handed way to promote adoption of the technology and expansion of commercial units being deployed. And we're strategically approaching this without looking at huge dilution to shareholders. What we do know is that we have proven this technology works for a number of different commodities. We've proven that it's highly effective. We've proven that it's non-cyanide. We've proven that it can help with remediation of sites. The best way for us to grow from here is through partnerships. So that's what we're looking at.
Very good. So if I was to give you a crystal ball and we were to look 12 months, 3 years, 5 years, what is the vision? What do you hope to be producing? I mean, in just simple terms, I understand that you produce a lot of different metals from this, but at the end of the day, this is a gold play in terms of with additional other stuff. What are we hoping to achieve, like in 12 months' time, in 3 years' time? in 5 years' time, can we be producing 100,000 ounces? Can we be producing 300,000 ounces? What is the wish or the hope? I mean, I understand it's a forward-looking statement, but I just want people to understand the potential size that this could become.
Well, yeah, it is a forward-looking statement, but at the end of the day, we built Fulcrum for growth, so we need to have that ambition there. We're starting off at around 200,000 ounces of gold on our two projects. So clearly, if we want to get up to the 50, 100,000 ounces of gold production levels, we need to build out our resource profile. That's why we're doing the pilot plant. We've got the opportunities in front of us to use the pilot plant to secure those additional resources. We want to get up to 1 million ounces in short order, continue to build that. And as we continue to build that, we want to build out the deployment of the commercial units on projects. The scoping, the high-level scoping study for tech use envisaged 11,000 ounces per annum. So that clearly early benchmark is 200,000 ounces resources, 10,000 ounces a year production as a start point, but we can very quickly scale up on that through our approach, and in particular this pilot plant.
So that was well not answered. Very good, Ryan.
I told you we want to get over 1 million ounces in terms of a resource base. We want to we're being aggressive because we feel that there's a space here to be the tailings company, the mine processing company. It is absolutely there. Most of Canada is focused on new mine and mine expansions. And ironically, what that means is you have to expand your tailings, because at the moment, all the methods, they all produce wet tailings, and that's our target market. So the opportunity for us to grow in a slipstream of your traditional miners is immense.
So at 100,000 ounces, I'm going to paint the picture here, and that's of gold. You're talking about $500 million a year of revenue. Now, granted revenue, but at the end of the day, you're not spending a lot of money on mining because you're literally digging it from what's already there. Now, from the figures that we've all sort of seen, there's a hell of a lot of other assets involved in this other than the gold. So can you see that, not 0.8 grams per ton, but well over 1 gram per ton when in gold terms, when you add all of these other assets? Is that a likely scenario, you think? Obviously, it's going to be dependent on each thing, but I mean, or each tip, if you like. But in general, this area is all coming, or this ore is all coming from the same area, or the tailings are all coming from the same area. So, yeah, what are your thoughts?
Well, for sure, it's got the potential to do that. If we take Hughes as a case point here, we're talking of 0.65 grams a ton just for the gold. From those phase 3 results that we put out, you'll be able to see on that release that upgrades it to something like, I don't know, closer to 0.8 grams a ton. We know that there's other minerals in there which can push that up even further. So, the key for us will be to assess, the economic potential of all of those considered metals, optimize the product mix to optimize the single stage, simple process. That will help us, be efficient with the costs. What I was saying, even, if I take the case point of Tech Use, 11,000 ounces of gold in terms of production.
Okay.
With current gold prices, you're going to be looking at, free pre-tax cash flow, $35-45 million. I mean, this is not a particularly huge asset, but it's certainly one that helps establish Fulcrum as a tailings company.
So you envisage that on that particular asset, you could be doing 30 to 40,000 or 30 to 40 million dollars free cash flow a year.
Yeah.
From those 11,000 ounces.
Yeah.
And you have a current market capitalization of 15 million pounds.
Yeah. And that's just Tech Hughes. Obviously, we've got Silverknight, which is our second site there. But, crucially, like I say, this is not the end game for us. We're an aggressive growth company in this space. We've got a lot of different opportunities being presented to us that's going to enable us to rapidly build up those resources to ultimately build up the production potential of Fulcrum going forward.
Very good. So it all seems too good to be true, right? So everybody's looking at these things going, nah, you're having a laugh, okay? Because your company should be worth about £100 million minimum right now, okay? If what you're saying is true. right? If we just took 3 or 4 times your 11,000 ounces a year that we expect and say, right, we'll give you 3 or 4 times cash flow, then ultimately you should be worth about 140, 150 million dollars, 100 million pound market cap without pricing in any future growth or anything else. Okay. So what are you not telling us?
Well, look, we've got to go through the de-risking stages, right? And there's some very key de-risking stages ahead of us. The phase 3 results was the first gate that we walked through. The pilot plant, the pilot testing that we're going to do, towards the end of this summer is probably the biggest gate that we will step through. But then the third point is, how do we move from there on site to get into production? The pilot plant helps us achieve all of those things. We've obviously the other de-risking element is getting, the institutional backing to get these commercial units out on site, turning the dirt, so to speak, and producing the gold. We've received a lot of institutional interest, to help us, through the piloting and the build out of the commercial units. So it's all in play, and we knock those de-risking events down, and really it should see significant value placed upon the Fulcrum business model.
So I'm going to ask about you as well. I mean, you interestingly said that you've been involved with Extract 10 years ago. So what is your background to bring you into this? Because when Fulcrum first listed in 2023, I think it was, you were, in inverted commas, a traditional mining company. You were going to go and have an asset. You had a uranium asset, you had a gold asset. You were going to go and, progress those assets and make your fortune in Canada. And that was what was going to happen. So you sort of fell across the tailings, I believe. Anyway, I'm not taking that as a negative, but the tailings came to your notice, if you like. But tell us a little bit about you and how that came about over the last, say, 10 years or more that we are now in this situation.
Yeah, sure. So, I've invested in the mining space for a long while now, and a few investments didn't really turn out the way I expected, and I was just like, well, you know what, I met Aidan, sometime during 2015. We was in a similar boat, and we was just like, well, you know what, let's have a look around. Let's try and do something that is a lot more proactive, pro shareholder value creation as opposed to lifestyle. So, we started looking around the States for various different types of projects. We even looked at things like helium at the time. And we came across, we got introduced to Extract, and initially through, a guy that owned a helium project, and got talking to William Floorman, didn't know who he was at the time. And he said, you know what? If you're really interested in doing something that might be game changing in the industry, I'll show you something. So I went over to visit the testing facility that he had there, and he's working on, separating oil from tar sands and, dewatering copper tailings. And I was just like, I couldn't believe what the technology was doing to this really heavy, dirty material and producing, dry sand and oil. And I was like really taken aback from it. So, we spent, a year or two to and fro in, getting to know William, getting to understand the technology. We actually tried to do something with that, with oil sands in like 2017, 2018, because we knew the technology would be a game changer. But, the industry wasn't ready for, something in tailings, never mind tar sands. So it just didn't work for us at the time. So we switched our attention to traditional exploration, which we did. We picked up some assets. We listed on AIM in February 2023. We've done really well to get listed, but of course, it's a very difficult time on the markets for the mining industry as a whole. And we really struggled, just like many others. And it didn't seem to matter what we do. Like we brought the Tully project in, which had an outlying gold deposit and big potential to expand on that. And the market still wasn't interested in that. So we're just like, well, look, we know there's a big tailings opportunity, and we know the technology and the partners that we'd like to work on this. So, back into 2023, we're just like, right, this is what we're going to do now, because you know what? Exploration isn't getting the clamour that we need. It wasn't getting the support that we need. So we took some hard decisions. Ultimately the directors funded Fulcrum for probably the next 9 months or so from that point to go through that pivot from exploration into tailings. We successfully divested exploration assets like the uranium portfolio, the Tully Gard project at, significant increase on what we paid for it. And, we managed to secure 2 tailing sites, the partnerships we got with Extract and Bechtel, and here we are.
Sounds good. Great background. And you're on the roast, Ryan, so we've got to ask you, what is the perfect Sunday roast in the Mee household?
Well, yeah, for me, it's a nicely cooked chicken.
Chicken.
Yeah.
Okay.
You
That's good.
can't beat a nice, crispy, bit of juicy chicken. Perfect.
And would you go with some cranberry or some apple sauce with that? What would you go with for that?
I'm just a thick gravy man,
Thick gravy. Good.
Get me some roasters and some veg with a nice bit of chicken and thick gravy.
You see, you got to get the potatoes right. Tender stem broccoli, I found, is the addition, right? Because nobody likes the vegetables generally, other than the carrots. But
Yeah.
tender stem broccoli that just elevates it. With the chicken, right? The skin of the chicken is the best bit of the chicken. It just is.
Great.
It is, yeah.
Yeah. The rest of the chicken, if I could just buy the chicken skin cooked, that would be better than buying the whole bird.
I actually went through a period of buying chicken legs, and I'd peel the skin off, and then I'd kind of flatten them between 2 trays with a bit of seasoning, and I'd cook them and be like chicken crisps. They were
Yeah, and then the rest of it is tailings to get processed by some
get an AIM company listed, Charles, selling chicken skin AIM company.
Chicken
something
skin.
like
I don't know. You see quite a lot of fun things get IPO'd these days.
I don't know. The monkeys might not like it, especially the
monkey
ones.
Well, sometimes they do. Sometimes they do. But yeah, lovely to chat, Ryan, and good to have a comprehensive overview.
No, look, it's been a while. Obviously, we've had to do a lot of things to get to this point, and it's taken a couple of years, but we're alive and kicking, and we're ready to go through the gears. So it's been great here to be here chatting to you guys, and hopefully we do this a bit more often.
Very good. On that note, we'll say Ryan Mee, CEO of Fulcrum Metals. Thanks very much for appearing on the podcast.
Thanks very much, guys, and catch you soon.
Thanks, Ryan. Good luck. And your Indaba presentation made me buy some shares. So there you go. It was a good job.
Well, it must have been a good pitch then, Kevin. But no, it's good to have you as a shareholder, so I appreciate that too.
Thank you.
So let's have a look at some of the movers and shakers of the week. AFRN, actually, the top riser, ironically, which was last week's top faller, up some 120% after they announced they'd secured a further short extension of its $16.5 million senior banking facilities to the 20th of March 2026, agreed with Barclays, Bank of Ireland and HSBC. The extension allows the company more time to pursue a potential sale of its Amino and 24i businesses or a sale of the company itself. So rebounded well on that news.
Did I not say it would rebound quite strongly?
I think you
when
did,
we had that, I said, did you look at their cash? Did you look at their market cap? Is that not a cheeky bagger? A little trade? Get the hell out now, though. Not advice.
Did you go in and bag it or not?
I did go in. I did not quite bag it because I chickened out. But you know what? The thing is, there's nothing wrong with a trade like that. The market overreacts, get some free money, basically. Yeah. It's not that complex. Often you do that, though, and you just lose all your money on a falling knife. So
yeah, exactly.
One or the other.
Yeah, Kendrick Resources up some 32%. The gift that keeps on giving, this one, isn't it? I mean, I thought it might pull back to the sort of low ones, but the market hasn't shown that. I think it's trading around the 1.8, 1.85 mark right now. Done really well, hasn't it, in the last... I think we worked out last week that from the 0.15 lows to the 1.8 area, it was about a 12 bagger.
Yeah. I think it's just one of those where it's those rare earths. Rare earths is just the theme of the moment, right? Like if you look at Altona and their RNS that they came out, potential US government support, sovereign metals with that monazite, Amarok, and also, various others like Cobra. There's just, if you have access to a quality rare earths deposit, then the potential to re-rate really, really fast is really strong. And what Kendrick has looks really attractive from an early stage point of view.
Yeah, don't sell too early is all I would say to you. I think once the agreement is signed, I think then this is going to progress quickly.
So what's the date on that? Was it 4 months from the
Yeah,
RNS?
it's the 12th of May or something like that. The interesting thing is, I think once it's no longer just an option, then we're in a different ball game. And as Charles said, wrote as well, that these rare earths are pretty good. I see this as going to be a really, really, really quick win. I think within 6 to 12 months, this will be packaged up and sold, and it could be sold for hundreds of millions. Now, might not be, but don't be rushing for the exits just because you've doubled your money, is all I would say to you.
Yeah. And then another one which kind of beggars a belief is Extract. Obviously, it's done very well. It's up 25% a week, but it doesn't feel like really the market has woken up to it. I did post a video online from the site there at the operations, which a lot of people saw and sort of, obviously progress. It looks like things are progressing very well at the Silver King small scale license there. I met the guys like you did from Cooper Lemon / Oval Mining in the week in London, and they said they're very impressed with how things are going. I think it's hopefully going to meet the timelines that they talked about in the RNS and getting things running. And yeah, it looks like a really good project. Plus, coupled with Manica, coupled with Bush Ranger and the antimony in Morocco, it looks like the market just hasn't kind of woken up to this one yet.
Well, everybody still thinks it's Colin Bird Company and they don't like it, and they're going to miss out. It's as simple as that.
Yeah.
I think if you do the same maths that we did with Fulcrum and assume that Silver King does free cash flow of £10 million a year or $10 million a year, and the antimony does the same, so $20 million free cash flow, times that by very low figure 4, you've got $80 million. Reduce that for obviously for the exchange rate, you've got 60 million market capitalization. On top of that, you got Bush Ranger, which basically even the spend on Bush Ranger is $40 million US, for somebody to buy it. Never mind the fact that they're going to pay more than that. And you've got a company in excess of £100 million, as far as I can see. And at the minute, it's currently valued at about 12. So, and that's without the licenses in Zambia and the other stuff that they've got, and the cash coming in from the Manica thing. Also, the fact that they just raised money as well.
Yeah, I think it's in terms of like fundamental versus market cap. Obviously, the market cap has a long way to go up, but I think just in terms of market perception, the timelines for production and getting copper revenue, getting it going, look fairly aggressive. That doesn't mean it won't happen. When it does happen, it'll re-rate very, very quickly. Whether that's 3 months, 4 months, 5 months from now.
Yeah. I mean, there's people commenting when they're saying on the groups about, look at the performance of a lot of these companies. They've dropped from the 10p's to sort of, sub 1 penny. And I was doing a bit of research on some stocks in the US, and I found that Beyond Meat had dropped from a $200 stock to a sub $1 stock. So it's into the cents now. 99% reversal on that share price. And obviously, there's a few things there. Obviously, plant-based meats are not, they're not taking off. There's no appetite for them. Excuse the pun. Equity dilution, all sorts of things going on. I think you already talked about a lot of these venture cap VCs are not going into a lot of these sort of like plant-based foods and lab-grown meats. But ultimately, that does feel like that stock in the years to beyond will never recover. Whereas something like Extract, they're in a much stronger position now than they were back in the day when they were trading around the 10p mark. So surely that there has to be some, re-rating of that stock to see value.
Yeah, I think the big thing for Extract for me actually, it's interesting because obviously Silver King and the antimony in Morocco and the Manica cash sales are all kind of like what all the focus is on, because production is exciting, money coming in is exciting. For me, it's Bush Ranger. Bush Ranger is the actual key re-rating catalyst. I foresee a world where that gets maybe not sold for cash, but gets vended into an ASX vehicle, and Extract gets shares in that ASX vehicle.
Yeah,
and I exactly what Bazant did with their asset, which was African based. Yeah. And then see what that did for Bazant. And I think we'll see exactly similar on a much grander scale, because Bush Ranger, its geographical location and where copper price is, that's tens of millions of dollars potentially in shares in the ASX company if they were to do it properly. And I'm certain that that's back on the table with copper where it is. That's what'll re-rate it. That's my view, but we shall see.
Good. And then Shakers SBTX down some 57% after they announced they'd launched a board investigation in the conduct of the former CEO following his resignation, and new information suggesting material misrepresentation to the board, auditors and advisors. As a result, the company expects to reverse 0.77 million of accrued royalty income from its 2025 accounts, subject to auditor confirmation. This will reduce the 2025 revenue to £3.87 million and widen the adjusted EBITDA loss to 1.17 million. So not great for there. I think it almost looks like a bit like your AIM article you wrote, isn't it, about the AIM is monkeys or AIM is bananas or whatever it is.
Yeah, well, I think it is just in this case though. I think I don't really want to get sued, to be honest, but I think we saw not something identical, but with Chill Brands a couple of years ago. The reality is that there are management who do everything above board, management who are a little bit grey and shady, and that's just the nature of the game. Then management who are committing outright fraud, and then you have to decide what category of management was in place at that company. And that's for the individual investor to decide. What I would say about this particular story is much like the one we were just discussing. The share price, as the story develops, might go lower and lower and lower, but at some point there could be really strong fundamental value for a rebound, because the company still has value and revenue and et cetera, et cetera. And often after a story like this, investors want to get out at any price. That's where you can find really good value.
Agree. So anything else? Any other stocks you want to talk about, Charles?
We've got. I think we've got United Oil and Gas next week. I think it's been on a run the past few months. I think with that ship out there, if the piston coring, which is the program, the free phase program, which is ongoing, comes out with positive results, I think that could keep going higher and higher. But at the moment, I think a lot of companies are simply we're very close to catalysts, but they're all kind of coming in March. Is what it feels like. One to keep an eye on, I think, in particular, is Sovereign Metals, that we've talked about a lot over here, because that MRE upgrade and the definitive feasibility study, which is now backed by both Rio Tinto and the IFC through the World Bank, those are coming this quarter, is what the company has said. So there's a very narrow window for those to arrive. When they do, you'd expect re-rating of the stock. But in terms of next week, I think yeah, it's looking like a quiet one, which is all right because it's half term this week. I think we need a relaxing one.
Absolutely. I think it's certainly slowed down on Friday, the number of RNSs. But yeah, the sovereign news was great. Okay, Kev, anything you want to talk about?
Just the one, really. I think even though there's a lot obviously going on, probably could talk for half an hour, but Delta Gold Technologies, fantastic raise, 35p, which was basically above the market price. Really looks like it's going places now that it's signed Penn State and Toronto University for this quantum technology thing. And that leads me on to stocks for 2026. We're currently up about 45% on average for the stocks. And the two stocks at the top are Delta Gold Technologies, up 130% at 42.5, and Extract Resources up 100% basically at 1.1 thereabouts, closely followed by GMET. And I sort of want to bring the understanding to people that what you were saying, Charles, about who is in charge of these companies. GMET, or Guardian Metal Resources, is Oliver Friesen. The current CEO of Delta Gold as well is Michael Jones. You've got the backroom staff also from Delta Gold, which is Jamie Tosh. And you've got a big supporter also as Mark Bennett as well in there. So it's not just about the story. It's about who's managing it, who's looking after it, and where you want to put your money. So I'm agreeing with what you're saying. It's about we need to put our money in the right places with the right people.
Yes, indeed. And I think that's basically. Yeah, I did an article on moonshots as well this week, and it's basically I think the kind of the underlying theme is obviously you've got to get the right assets, and you have to have the right capital structure. But it is just the right people at the end of the day. And I think more importantly, it's that CEOs and management boards, are reasonable with finances, but they communicate to the market and they're able to attract investors of an institutional nature. And I think that's probably, again, even though we live in better times for mining, that's probably the most important factor, is that you get an institutional backer that validates your product with their own capital. And if you have that, then everything flows from it.
Yeah. Delta Gold got that this week with the institution that went into the raise, and we've had that with not with Delta Gold, with GMET. I don't think now we've spoken to Ryan that we're going to be too far away from institutions wanting to invest in that project, because I mean the one thing that we didn't really pull out of that interview, even though it was very long, was the whole ESG thing about cleaning up the world in terms of this mining thing is a big play, never mind the finances. There's water tables getting poisoned, there's all sorts of stuff that we could have talked about that we thought we didn't, but I think it's really going to be a bit of a game changer, to be honest.
We shall see. I think the ESG thing is, from the mining perspective in particular, is interesting because there's so much capital going at assets which are pre-production, that the companies that own those assets are going to pick the ones which are most ESG focused. The funds that want to fund them are also going to pick the ones with an ESG focus. So because previously you just took whatever asset capital was being thrown at you because that was all there was, now there's choice. It's going to go down the ESG route, and in many cases it's going to move up. If you look at Ethereum, for example, we spoke to Charles relatively recently. That distinction is what he brings up all the time. What he's taking out of Rwanda, that is ESG focused and traced, and it's becoming increasingly more important. But yeah, good theme.
Yeah, and I had meetings cancelled with Charles Bray from Ethereum because the Americans wanted him. What happened when I couldn't get hold of Sapman because the Americans wanted him?
Indeed. We shall see.
On that bombshell, we will move quickly on to the football. You've got Forest Liverpool game at the weekend. We've got Everton on Monday night. How are you feeling about the league now, and the fact that Arsenal are just continuing to choke at the top of the league?
Sorry, that was Arsenal there in the background.
Yeah, choking up, aren't they?
Yeah. Well, to be honest, I watched that game. They were 2-0 up, cruising. And then your Wolves guys scored a worldie, I have to say, from the edge of the box. And then they started panicking. Big mistake in the defence. Both defender and the goalkeeper went for the ball, bounced back out. Boom, 2-2. It's looking familiar, isn't it?
It is indeed. And then there was
so United going to come through and win the league this year, then, or what?
Oh, they won't win the league this year. I don't think
that was sarcasm, Phil.
Yeah, no. I think they'll get a fourth spot. I think they'll get a fourth space now, and they're talking about installing Carrick as the permanent fixture. So that'll be interesting. Did you see any of the FA Cup action? So the big upset was Mansfield beating Burnley in the FA Cup. So I love some of this giant killing stuff. Anything else? We've got Formula One starting next month, in the next couple of weeks in Melbourne as well. I'd be interested to see. Yeah, it's back on the agenda, man. It's going to be interesting seeing what they do with these new cars, and half of the power coming from the hybrid, for like EV powered. Big changes to the fact that they've removed the DRS, and they've got the push to overtake back and everything. So yeah, it'd be very interesting to see what comes out. Yeah, anything else you want to talk about before we wrap up?
Okay. No, I just hope everyone's had a good half term. It's rained every day where I live since the start of the year. Has not stopped. I went on a run, as I do most days. I went on a run yesterday, right, and it wasn't raining, and it was brilliant for the first 5 minutes, and then the heavens opened, and I'm just sick of it, And this is the problem, right? I think we should have this half term. We should have gone hit a beach, gone to Portugal, We didn't, and then I see it's like 23, 24 degrees down there, and instant regret.
But they've had, to be fair, they've had some really wet weather in Spain and Portugal. They've had storms come in, because I was down there, and as I moved away, that they've had something like a year's worth of rain in 2 days down there in the south. So yeah, they've had it really bad. But no, you're absolutely right. I think they said that it's rained every single day in 2026 at some part of the UK, which is unheard of.
Yeah, that every single place is Exeter, Devon.
Well, say a little prayer for us, because we're going through a bit of a cold snap here. It's like 8 degrees at night and 20 during the day.
And the island's out for Kev. That's a nightmare.
There's sun, but there's no heat. So it's going to be bad for the next 10 days.
I think what I like to think, though, is in the summer when we have the heat waves, and because we've had so much wet and cold in the winter, the summer should be hot. Law of averages. I'll be wishing for a day like today. So try and keep that in mind. But I think I don't know. Moving abroad is looking increasingly more attractive. I'll come live next to Kev.
Well, Ramadan has just begun here as well. So Ramadan Kareem for anybody who celebrates it. But I've been trying to convince my wife that we go up to the Mediterranean for Ramadan, because pretty much everybody stops doing everything here. But she's not buying it yet. But we're going towards the end of it, I think, for a couple of weeks before I come to London again.
Okay, well, if you do like what we've heard, please subscribe, hit the bell icon so you get further notifications of future episodes, and have a great weekend all. Thanks for listening.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.